Hello traders, welcome to FreeFX. Today is the 13th of October. We are live with the CPI data release market reaction. When I say market, I mean the SPX 500, not the market as a whole, because that's impossible to assess in one video. So we have the daily candle just in front of us, and I'm going to trade this live. So I'm going to go down to the 4 hour, and I see a big reaction there. So it looks good to go. I'm going to go short on this. So let me just make sure that I'm connected. I'm connected. I'm going to trade this right away. So I'm going to, if I can, no bids. Okay, interesting. I'm going to trade it off my mobile, and you'll be able to see that coming through. Right, it goes. Okay, so I'm going to go for so that's the trade in. That's me at price. The transaction has been put through. So why have I done that? Well, because clearly a big reaction like that is might change through the course of the day. But the immediate reaction is indicative of some data that's come out, which suggests that the price reaction suggests that there's some kind of imbalance that we're going to trade off of. So let me just go through and see what the data says, if it's actually been already taken into account. There's our CPI. So CPI 8 point. So let me here we go. Inflation. There we go. Core inflation. This is the one. Core inflation rate year on year. And we've got actual 6.6 expected, 6.5 previous 6.3. So it's higher than expected. Inflation rate 8.3 previous. This is the inflation rate, and that's the core. So the core is higher. The actual inflation rate is just waiting on that. I'm just waiting on that. So core inflation is higher. So now we had a CPI Tuesday, as I call it, back on the 13th of September, which is all the way back to here. The reaction we got there was quite severe. So if we did a study on that, we could go do a calendar, go to the 13th of September. So just kind of bear this in mind, that the expected core was 6.5, it came out 6.6, so just 0.1 higher than previous. So 0.3 higher than previous and 0.1. Just remember that. We go back to the 13th of September just to see, because that was a big reaction then. And we just have a look at that. Oops, just that one. Okay. So on the 13th of September, the CPI, there it was, core inflation, expected 6.1, came out 6.3. So 0.2 higher, previous 5.9. Okay. So it was actually 0.4 higher than previous and 0.2 higher than consensus. Versus now, 0.4 higher than previous and 0.2 higher than consensus. Whereas now, the core inflation is just 0.1 higher than consensus and just 0.3. But kind of very similar numbers. And the reaction we got back then was this. Okay. And what was that in numbers? Well, if we go from open to close here, nearly 5% drop, 4.7% drop. Okay. So will we get that today? Look at that big candle there, looking nice and juicy there. So the initial reaction is about 2.2%, almost. And what is happening today with this? We got that figure. Yeah, actual It's 0.1% higher than consensus. This is the inflation rate as opposed to the core. So the core is higher than consensus by 0.1%, and the actual the inflation rate is higher than consensus by 0.1% as well. It's a tiny titsy bitsy lower than previous, but the core is higher than previous, and they're both higher than consensus. So at the end of the day, that's what we're getting. This initial jobless, we've had an NFP, so this is not really that important. The CPI is come out at 296.80. It's higher than consensus and higher than previous. Now, are we getting a bit of a rebound off of that? There are two problems here. One is that the US stock exchange hasn't opened yet, so we need to wait another hour, just under, which means that, you know, the big reaction might come then. But as I showed you before, same time, that 13th of September drop was certainly not expecting the United States to wake up. That was during European hours, so you know, that move started. If you break it down, it certainly didn't have to wait for the US to go online. So this big reaction we're seeing here, I'd say that's a pretty good indication of what we're seeing in terms of consensus on that. So I wouldn't be particularly worried about you know, this kind of being counter moved and reversing. I think that's a pretty strong statement there. You know, so far we're going to see a lot more. I'll just remeasure that just for sure. Yeah, 2.5. Yeah, that's moving solidly down. So this is a great day. Finally, we see a very dormant kind of chart waking up to the fact. The facts of the matter are this is not going to go away as quickly as a couple of interest rate changes from the largest bank, one of the largest banks in the world, central banks, and then by magic, you know, they're going to sit back and let inflation magically go away. So I think it's going to take a few months, and even if it's sort of hold rates from February on, don't hike. You know, there's a recession coming. Everybody will feel squeezed, including companies, including earnings, including shareholders, including equity holders. So, you know, if you have to get rid of bad capital, you dump it, and when you dump it, what happens to the price? It goes down. It's just the nature of finance, really. It's not a bad thing. It's just a necessary thing. So if you think it's necessary, it's going to happen, you can do something about it. You can position in a way that minimizes an impact. If you're a trader, you trade down. If you're an investor, you sell assets and go to cash. It's more complicated than that because there are all sorts of situations. Not everybody's in a good place when this happens. So I realize that, and we're not here to give financial advice. I just think that you know, it's not all doom and gloom. A red candle is an opportunity, so we just trade it and move on to the next phase. If we're going to go into our so-called bull market, if we're going to uptrend again solidly for the next 10 years, then we'll trade up. So not really a particular attachment, but until that situation reverses, I think it's a bit bonkers to keep saying, oh, this is going to be a bull market now. It has to be. You know, just trade. I've made a lot of really amazing trades all the way through this year. Just trading down. So, you know, you would have missed a whole year of opportunity just because of a belief that it has to be a bull market all the time. But clearly, if this happens, this downtrend happens for a whole year, you cannot possibly think it's worth missing the opportunity for you to sit on the sideline or even trade against it. I mean, it's not worth it. So if you are trading rather than investing, I think this is a great opportunity, generally. So I hope you've managed to do that. Looking at the daily, just for a minute, going back to this picture here, and the way we are looking, I was going to get rid of the arrows, actually leave them in. So we've had a few days of kind of really quiet trading conditions. But I think we can now certainly say that we've restored some of that momentum, as you can see, after some very small candles. 3 small candles there after the initial drop on the 7th. That was non-farm payrolls day. We've moved down, and again today is proving to be such a day. And we've had previous days like that. But this is an amazing, I mean, if you look back, this is day 6 to the downside. We're coming close to the bottom Bollinger Band there, so, but there's plenty of room here to squeeze past. You can see back in September 21st, we kept pushing for another 3 days across the weekend down into the Monday before we had a stall, and then further down. So this Bollinger Band can expand. Even as we touch it, we can push down to the -200 CCI, so that we've got a few more juice left to squeeze there. And if we look at the VIX, what's happening with the VIX? We are now at 33. We peaked at 33.5.6, and we're down to 33 again. So as I mentioned, these double peaks that repeated could have been a bad sign for trading down, but actually we've picked up and we're heading up. So the general trend is that we're heading higher. So I think that's kind of safe to say that we are in that position. So I'd just like to say it'd be interesting to see what happens to the US Open in 3/4 of an hour. But it's safe to say that that's the conditions there seem to suggest inflation is sticking. And the Fed has plenty of reasons to continue in its path, which has been announced plenty of times. In fact, the Fed minutes from September, which were released last night, didn't really deviate from that. So, that's why we didn't get much of a reaction there. It's, more of the same, really. Just waiting for today to dump more capital, more stocks, more whatever. So, it will keep moving until the problem goes away, and there's a change of environment, which doesn't seem to be there. So, but of course, money goes where money goes. So if everybody starts to buy up this index, then clearly there'll be another uptrend, and it might fly in the face of what the Fed is doing. But I think if it's going to cost too much to buy, so money talks, and it will not be bought, it will be sold. So this has plenty to go. I mentioned before, and I've done this in a previous video, but I'll show you again. If you go to a weekly, see the black line there, that level is a pre-pandemic high, I think it was 3360. Just double check. 3391. Okay. And 3391 is not far. I mentioned in my previous video a 5% would take us down there. Today's Thursday, so that video was on Monday. So 4 days ago, Thursday, Wednesday, Tuesday, Monday. So we were just kind of dipping under the 16th of June low. So from there, we had sort of 5%. From here, where we're now, we've got literally... Okay, I just have to make it a little bit bigger for it to allow me to measure that. Maybe just do from here. Tell you what, I'm just going to do it from there. It's probably easier. It won't let me because maybe go to the daily and just squeeze that. There we go. So how much do we have to go? How much further? Well, if I just... Yeah, we're talking about 3.5%. So that 5% is now 3.5% to the pre-pandemic high. which is the cyclical sort of high before the next one, which was basically December of this year, before we started, coming down. And that's very close, so it can be done. What happens at that point, I'm not sure. 3391 is below 34, and at 35 we're just dipping below 3500, which by a lot of people have been signaled as a very significant level. We are in the mid 30s on the VIX, so not quite alarm bells, but previous peaks have been around these levels. And of course the sort of pandemic outburst up to the sort of 80s, that's a big sort of jump. So but we had that in the 2008 crisis, so I think it's achievable, but we just have to wait and see. So right now I'm in a short. I'm doing fine, and I'm just gonna set a target now. So realistically, if we look back to something like the 13th of September, and just measure that again because I've done it before, but I do forget sometimes, that was a 4.5 move. So from where we are now, if that's obviously going to be beyond this level. So I'm going to set my target just kind of conservatively to the 3391. Okay, so if I just do that and I take this down to 4 hour and put it down to that. So let me just put it down to there. Okay, just below that. My internet connection is a bit funny at the moment, so on the trading platform it's just being a bit funny, so let me just try that again. Okay, it doesn't seem to be wanting to do that, so I'll have to maybe do it on the platform, the mobile platform. So let me just try that, see if I can set it on here. 3391 is going to be think about there. Let me try that, see if it comes up on the screen. Yeah, there we go, that's been done. So, and then I have to set a stop as well, but I'm going to wait until the US market opens, because that might be a good time to decide where the stop might go in case of a reversal, or I might just close the trade and take some partial profit. So I have to wait and see. The stop would be half that, if not a third, so 51 about 17, so it'll be about, let me see if I can put it, it'll be about 17, about there, something like that. Okay, so but I'll just wait and see, because it's a wait and see kind of situation at the moment. So alright, thank you very much for being great. I will be away tomorrow for a few days, so I may not do another video at all next week. So not one tomorrow, so I decided to do one today. And I'll put some posts up on Twitter and you can follow it there. So, but for this week, certainly that's the end of my videos, and nothing of interest really happening next week. So I will just sort of keep an eye on the charts and maybe post something if I can, but if not, it will be the week after. So have a great week if I don't see you, and thanks again for following my channel and being my watching and viewing public. Take care. Bye.